Good morning. This is Larry McMillan with a stock market update on Monday, April 8th. So last Thursday, the market sold off pretty sharply on Fed governor's hawkish comments. A little bit of a knee-jerk reaction there, really, because the Fed governor is always hawkish, that one anyways, Neil Kashkari. And he, really didn't say anything that wasn't probably already suspected by a lot of large or professional traders, but perhaps it did just generate some, as I said, knee-jerk selling. Anyway, we retreated into the support area and have bounced out of there somewhat, but the general support area between 50.50 and 51.80 on the S&P 500 is still intact. If we were to fall below 50.50, then that would be more of a major problem. On the upside, we've had 4 separate days in recent weeks where we've topped out at about 52.60. So that's resistance. If we were to rise above 52.60, then we'd probably get another round of buying, another leg on the bull market there. Equity-only put-call ratios and breadth are turning negative, so there is some internal deterioration here. The equity-only ratios have finally started to move higher, at a faster pace, and so that's a sell signal. And breadth also deteriorated last week before that selling day, but also on that day. And so that's the breadth oscillators are on sell signals as well at this time. However, New York Stock Exchange new highs, they continue to be large in number, more than 100 every day, some days 300 or 400, and they're dominating new lows, so that indicator remains positive. So that kind of leaves us with VIX as maybe the determining indicator, and VIX really isn't telling us much of anything, as has been the case for some time. Yes, VIX has crept up towards 16, and that's slightly above its 200-day moving average, but all in all, that's not a real problem. It would be if the VIX 20-day moving average were also to cross above the 200-day, but that hasn't happened. So we're watching VIX. There's a little bit of a minor concern in that the front month VIX futures, the April futures, are trading at a slight discount to VIX. That's a little bit worrisome, but really nothing major yet. So overall, we're still maintaining a core bullish position. We did roll our calls to slightly out of the money calls, taking a little bit less aggressive position there. But we will continue to maintain that core bullish position. We'll trade other things around it, such as these new minor sell signals from breadth and the equity-only put-call ratios. But overall, the core bullish position is still intact. I invite you to visit our website, take a look at our daily letters, because these things seem to be happening more on a daily basis now. And meanwhile, have a great week trading.